Hello, welcome to the European Open briefing for Friday, May the 11th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. The US dollar has pulled back slightly from its recent highs following softer than expected US inflation data yesterday. Stocks are buoyed, though, by indications that the Goldilocks economy will continue as the Fed won't need to raise rates more aggressively. We also have the cooling of tensions in the Korean Peninsula, which is boosting risk-on sentiment this morning. The pound is off its lows following the slightly more dovish than expected Bank of England at yesterday's policy meeting, where the bank lowered its forecasts. The Australian and New Zealand dollars are attempting a rebound on the back of the softer US dollar, and the Canadian dollar is steady ahead of some key data later today. So let's start with the US dollar. We can see dollar index retreating somewhat from those 4.5 months highs early in the week, around 93.30. We can see dollar yen, though, yesterday briefly spiking above the 110 level before easing to around 109.40. So yesterday, yes, the inflation data out of the US was somewhat disappointing. The headline rate came in line at 2.5% year on year, but the core rate was unchanged at 2.1%. Expectations were it would rise to 2.2%. The month-on-month rate for both this headline and core rates missed expectations slightly. So all of that further reinforces the view that the Fed will continue to raise interest rates only gradually without having to start tightening more aggressively, and that's been positive for equities. We saw US stocks closing up by 1% yesterday, and most Asian indices closed higher this morning. We also have positive risk sentiment from the President Trump and North Korea's Kim Jong-un setting a date for their meeting where they will hold first direct talks between the two nations. President Trump is quite hopeful, saying that there's a very good chance of doing something very meaningful in the talks. So the two leaders have decided to meet on June the 12th in Singapore. We do have some tensions, though, in the Middle East between Iran and Israel after missiles were fired between Syria and Israel, where Israel targeted Iranian military operations in Syria following some rockets being fired into Israeli territory by coming from Syria. So the market reaction to that, though, has so far been rather muted. If we now turn to European currencies, the euro yesterday got quite a lift from the soft US inflation data, where it managed to recover back up above the 1.19 dollar level. It has been drifting lower, though, since then. It's struggling to hold above the 1.19 level. There is some anxiety about the new Italian government. It is looking increasingly likely that the anti-establishment parties, the Five Star Movement and the League, will be forming the next government in Italy following the stalemate since the inconclusive elections in early March. So both parties want to raise spending, and that would put them on a collision course with the EU, which has set Italy some tough spending targets. If you look at the pound now, we can see the pound is steadier above the 1.35 level. Yesterday it touched a 4-month low, 1.3457, after the Bank of England lowered its growth and inflation forecasts in its quarterly report. The bank kept interest rates unchanged as expected at its policy meeting, but signaled that an ongoing tightening of monetary policy over the forecast period would be appropriate. The markets initially weren't convinced by that, but have now once again started to price in one rate hike for this year, which is likely to come in November. Let's now have a look at the Australian and New Zealand dollars. Both currencies are attempting to rebound. We're seeing the Aussie around 2% above those lows from early in earlier in the week when it touched an 11-month low of 0.7410 against the US dollar. The main reason for that rebound is the dollar rally appearing to lose some steam, as well as a technical correction given the Aussie's sharp falls recently. The New Zealand dollar, yesterday we saw that big slump after the Reserve Bank of New Zealand signaled that a rate cut is just as likely as a rate hike. So that wasn't expected by the RBNZ, which until now had been saying that the likelihood is for a rate hike. And in addition to that, we had the Reserve Bank of New Zealand Governor Adrian Orr saying that the Kiwi's decline is a good thing. So all of that is weighing on the Kiwi, which is somewhat limiting its gains. But we did see some upbeat manufacturing PMI being released in New Zealand earlier this morning. So all of that is helping the Kiwi currently hold near 0.6967 level at the moment, though yesterday it came very close to breaking below the 0.69 level. And finally, let's take a look at the Canadian dollar. So dollar loonie failed to break above the 1.30 resistance level early in the week. So that helped the loonie recover to around 1.2750 at the moment. There is some optimism that NAFTA deal will be done soon. US House Speaker Paul Ryan has set a deadline for May the 17th. We're not sure whether that deadline can be met, but recent comments have been positive. We also have Canadian employment numbers coming up later today, so if those numbers are positive as well, they would further boost expectations that the Bank of Canada could be raising interest rates at its July meeting. And let's not forget higher oil prices, which is also helping the loonie at the moment. Oil prices have come off those highs somewhat this morning. We can see WTI retreating a little bit to around $71.24 a barrel. There are hopes that should the US reimpose sanctions on Iranian oil exports, that the cut in supply would be offset by other OPEC countries increasing their production. So that is weighing on oil prices a little bit this morning. And let's have a look at today's economic calendar. It's going to be fairly quiet apart from the Canadian jobs data, as well as the University of Michigan consumer sentiment preliminary reading for May out of the US. We're also going to have a speech by Bank of Canada Deputy Governor Caroline Wilkins, as well as ECB President Mario Draghi speaking at 13:15 GMT. That's it from me. Thank you very much for watching and have a great day.